Welcome back, everyone, to the Prospero.Ai stock market live streams. We got exciting topics to get into today. I see some comments in the chat already. Awesome to see. Welcome back, everyone. Please like the video. If you're a frequent viewer, let me know what topics is on your mind today for us to cover. If we're not going to get to your topics at all, we are happy to answer any questions or concerns that you have. George will be joining me in a moment. But before he does, let me take you through some of the topics we're going to be getting into today. So starting off, as usual, we'll do a little market update. We'll talk about a few of the companies that have reported, and we actually got some negative reactions to earnings. So we'll cover a few of those and maybe what that means for how investors are looking at the USA economy currently. And if the market cares more about current results or future guidance, because it seems to be unclear right now in my mind, at least. And we'll talk about the U.S. economy going forward. If it's going to become weaker, are investors going to turn to international stocks, companies, and focus on them more if they have questions about future growth in the U.S. And spinning from that, we had an Apple event this week. They updated some of their iPad production for the first time since October of 2022. They have a new M4 chip. There was a new design for the first time ever. It was the smallest iPad ever made so far. So we'll talk about that, what it means for Apple stock, and if these designs are groundbreaking or if they're just another one of Apple's slight pushes forward. Welcome to the stream, Wolf. Good to see you. I didn't mention Apollo and Lila and methylcobalamin. I probably butchered your name, but thanks for commenting earlier. We had some news about Tesla stock today about how the Department of Justice is investigating them for not only securities fraud, but wire fraud. And it has to do with their full self-driving. So we'll get into Tesla and what that means for them. They reacted negatively this morning, but the stock came back a bit. So we'll talk about that in more detail and see what it means for the stock. And then next, we'll get into a company. You know how I like to do this to you guys. I think I'm going to make you have to guess it and then stick around if you want to know which company it is. But here's some clues to which company I'm talking about. It had a $49.3 billion market cap in 2021. And today, in 2024, that market cap is down to 1.3 billion. And it might be taken private soon. And we'll talk about maybe how that can occur. It's almost a 50x difference in where they thought the company would be and where it actually is today. So we'll get into that company in specific, but let me see some guesses in the comments. I would love to see what you guys think it is and see if anybody gets it right. Next, we love to talk about AI, and we're going to cover an AI company that might be flying under the radar a bit. It's a Warren Buffett style stock, we'll say. That would be IBM. I just saw some news about them partnering up with ServiceNow to provide them some AI products from their Watson X and Watson X AI into the ServiceNow platform. So with IBM trading so cheaply, we'll take a look at it, maybe look at it in Prospero, see how the signals view it, and talk about whether their AI is legit, whether they should be mentioned when we have these AI conversations, and whatnot. Obviously, at the end of today's stream, we will be turning it over to the model portfolio like usual. Before we do that, I'm going to welcome George to the stream as well. Hello, George.
Hello.
If we have time,
pulling the fort down.
no problem. If we have time, on these Thursday streams, we're on a little bit of a time crunch, so we have a swing topic for the day. It's an update on FTX and what the users and the victims, if you want to say, of the whole debacle will get. It looks like they're going to get their money back and more. So stick around. We'll update you on the full details of that story. But without further ado, let's look at the market today, George, and update everybody on how we're feeling about the current layout of the land of the indexes.
Let's see. I mean, I've been a little, net option sentiment on QQQ is back up to 40. I saw it kind of like hovering, in the mid, like I think I saw it at 33 at one point. SPY is at 46. So yeah, things are looking, more promising than they were this morning. Um, definitely some recovery. Uh, but it's hard because it does, it's kind of it's an extension of the same, where what we're basically seeing is more and more people, or more and more, days where we can't really sustain these rallies. And whether it looked like, towards the end of the week we finally got some consistency, especially with large cap growth. It's looking a little more inconsistent again. And like today is a perfect example of, one of those days that we talk about where we're kind of seeing the morning look, worse, and now it's started to get better, and we've kind of seen the reverse of that. So, it's very hard for anyone in the market. We've been doing pretty well the last few weeks, I'd say. And it's kind of hard, but it's still kind of hard for anyone in the market to, really gain confidence, take positions. Obviously, if you're anything like me, you really need conviction to, take, more risk, have more profit that way. And it can be very challenging if you're never standing on stable ground. So yeah, I mean, one of the ways that we have been successful has been balancing out risk and staying pretty even long short, especially to start the week. And then maybe we have more conviction towards the end of the week. But yeah, looks like another day, another inconsistent idea of like what we think is the main driver here, which is, how to value AI. Some of the consumer cyclical stuff that we've talked about is starting to maybe counterbalance the bullishness. But we'll get to that as we go.
Yeah, so I totally agree with your take about how like the markets seem so unsure and choppy, and maybe it's due to some of these companies that have reported. And I thought we were going to have a good earnings season the way the big caps and tech started us off, but now we've had pretty negative reactions from a couple stocks like Palantir, Shopify, Uber, Disney. But what's interesting to me about basically all of those companies and a lot of the stocks, even Meta from way back when it reacted negatively, a lot of the companies are reporting either beating or meeting expectations, but then their guidance will either be soft or miss, and they seem to react negatively. So if you don't have anything specific about any of those four companies, I'll spin to you. Does the market care more about this quarter's results or future guidance for when companies report their earnings?
Well, I want to hit both of those because I think, the Shopify data um, and the Uber data, those are like two different consumer spending forecasts, right? Very different. And the fact that those are both coming in softer than we expected is kind of the warning sign we've been talking about of like this consumer spending thing is going to, catch up with the market eventually. And them seeing real markers, and this is something that we talk about. There's nothing more important. Wall Street is Wall Street or whatever, but at the end of the day, Wall Street, has their own assumptions, but they're really, for the most part, building on top of company forecasts and what the companies have to say, because companies have data that Wall Street doesn't. So to a certain extent, you have to defer to them on some of the more complex stuff. Sometimes that can, bite you in the ass, but a lot of the times you have relationships with these places for a long time. So I would say the Shopify and Uber, both kind of being soft, is definitely like, I think that paints a picture of something larger. Palantir is a tough one because they're just anything where like their business is very large contracts, and anything like that you're going to have like it's beyond seasonality. You're going to see choppiness, and it's just like they could very easily post a quarter next quarter that like blows everybody away, even with because they're not exposed to the same consumer spending things. A lot of the people, like a lot of their contracts are just like government contracts, which could just be a function of the sales process, could be a function of like validating other things. So I think Palantir is kind of like a separate issue. But I would definitely say that, we've been watching for a long time, and we're definitely concerned about, this consumer spending thing starting to actually like, show real impacts.
Yeah, it seemed like the 800-pound elephant in the room that the market was just turning away from. I think you've kind of talked about how AI has kind of masked it for a little bit. But if it really comes into the forefronts of the minds of investors in the market about like the weakness of USA economy and consumer, Do you expect that international stocks companies will start to be looked at, uh, more attractively? We talked about Mercado Libre on Monday, and China stocks that have kind of not done well for a while. Will they become into the or let investors look at them more?
Well, I've gotten like my worst stock this week is Baidu. So I can say, and I've been watching other China stocks, and I could say specifically, it doesn't look like China stocks are the beneficiary here. But like, yes, I think emerging markets, I was even reading an article about how um uh Argentina, one of their main markets, is not doing well. But they still have, I mean, Mercado Libre is still like, a lot of people bullish and they're growing in so many other areas. So, like, I think you do have to separate that a little bit, emerging markets, at which there's always going to be an appetite for, versus like, a difficult market like China. And we've talked about many times, like, why China is difficult because it's a managed economy and like it's hard enough to invest in stocks when you have all of the data and it's being reported honestly. And that's just not really the truth in China. So there's that. And then there's just the aspect of like the American stock market is still the most popular stock market for a reason. Like America still on a high level is great on innovation. I was on a different live stream with some folks at Irvin Finance and a few others yesterday, and we were talking. We had a long talk about like Nvidia and chips and AI. And the thing that's kind of amazing about it is as much as China would love to and is very good at like ripping off products, like Lord knows they've tried to make chips as good as Nvidia's for years. And we're talking about a company that can like even execute on something that like is traditional American innovation, like TikTok. Like social media has been like American innovation before. In China, like it's the first time they've really come into that. But it just goes to show you that if they can even figure out something like that, but they still can't really compete with Nvidia, even when they have like cheaper materials to source. So many things, they still can't do that. It does still tell the story that like American innovation is still alive and well. And I think, not only are things like, ongoing innovation and companies continuing to innovate in America, that a real thing. But there's also just the reputation for it and the reputation for, the American government of being good at supporting innovation, being good at supporting the stock market. I mean, we talk about this all the time. Like, the American government, you can't point to a lot of things it's done well in the last, I don't know, pick a year, 30 years, 20 years, 50 years. I'm allergic to the idea that the American government has done anything well. But they have supported the stock market well. Like there's no argument there. That's one thing, that they've done an amazing job of. So that's like there's innovation, and then there's the government support of the stock market that just makes it very hard for me to see anyone overtaking it in those non-emerging markets, right? Everybody likes emerging markets because there is that upside, and there is that kind of like green field where if you do your homework, you could perhaps find some asymmetric information that just doesn't really exist in the stock market because of all the bots and all the money and all that stuff that we talk about all the time. But yeah, I think that it's going to be there's going to have to be some serious problems with the American economy before anyone starts to reevaluate, because it's like just to make one more tangible example, look at 08. Like how many people got screwed by that? And we're even talking about international investors that like got screwed on the mortgage-backed securities, got screwed on like owning the stocks, in addition to the American people. Yet the dollars come back, or they stay, or they always stick around. And I do think it's kind of that, two-headed dragon of like both our culture not doing that many things that great, but like supporting innovation is one of the things that we still do well. And then there's just that like there is that just like hard truth of the American government always supporting the stock market.
So we got a few
What do you
questions.
use Mercado Libre for? I don't like.
Probably e-commerce, right? You said they're Latin American Amazon, but also from
Yeah, like I don't know if they
Sauce Pod.
deliver here. Do they deliver? Yeah, who knows? Like I like
Yeah, he'll answer. Joseph's good in the chat. I'm sure he'll answer us. Um,
yeah.
but which sector do you think will be the most resilient during a major economic downturn, or perhaps even which companies?
So um I think these days, and I like I'm a bit of a broken record here. Sorry. Um, the best companies, like if we're talking sectors, right? I think you have your traditional sectors, like consumer defensive is called consumer defensive for a reason, because those are the goods that people buy in any economy. So that right there is kind of like a is kind of a hack if you're looking to diversify. And we have Costco right now. We've done pretty well with it. Utilities is another good one that is just like, you know, energy is its own thing. Like that really depends on prices. So that is always like a good diversification. But what I would say and what we always recommend is that, you know, diversification general is a good way of thinking about how to survive an economy, like economic slowdown, because like sometimes it's different issues that it's hard to anticipate. You know, for example, like if there's a war escalation, right? That's another reason where consumer defensive um, or industrials is, you know, where a lot of them are, can be really good choices, because like yeah, sometimes industrials in certain downturns don't do well, but if there's like war associated, industrials are always going to do well. But that's just like talking about all the permutations about like, you know, the sectors. But like overall, I think your best bet is not leaning on a sector but diversifying across sectors, maybe staying away from sectors like consumer discretionary, which just like doesn't tend to do well. I mean, those are discretionary things. But then also, like I think with this consumer spending thing likely playing a role in any economic problems, that's a particularly good one to stay away from. And then, you know, tech. Tech always gets slammed pretty hard um, in downturns, because people like want to buy value, they don't want to buy growth. So if you just avoid those two, with the caveat, I'm going to kind of go back. I hate to be like a boring broken record here, but like if you're looking for the safest investments over the next 10 years, Amazon, Microsoft, Google, the cloud providers. If you want to get a little more adventurous, you could do like Meta, Eli Lilly, some of the other companies that we like. But I don't think you can go wrong owning the cloud providers, because like of all the businesses that kind of have to grow, um, those are it. And the only reason I leave Nvidia out of that is because a lot of these places, Apple just made an announcement about making their own chips. Like there's kind of that existential threat. There's like, oh, if there's tensions with China, that'll be really bad for Nvidia, because that's a big market for them. Um, so yeah, I think that's how I think about things. Like you have either like, you know, a strategy of like just pretty much like loading up on the cloud providers that I think will insulate you pretty well, especially on longer time scales. Um, and then you kind of have the other side, uh, where you know you might have the cloud providers, you might just like diversify and like look at the best Prospero pick in every sector other than that, and diversification is always your friend in troubled economic times. uh, but yeah, that would be my official recommendation. Avoid tech, consumer discretionary, load up on the cloud providers, diversify into the other sectors.
So, since we're on the topic still of difficult economic times, this is a tech stock, but let me ask you if this stock might work in something like that since it's a bit more of a value. I feel like maybe the market is underestimating or it's flying under the radar the AI that IBM is offering nowadays. I was reading an article about how they're teaming up with ServiceNow. They're going to have the Watson X and Watson X AI in the Now platform. They're trading very cheaply compared to like most other tech companies, probably maybe you would say for good reason because they're a bit more of a legacy company. But do you think, if a time like that arises where there's difficult economic situation going on, a cheaper, more value company that still has some AI offerings would look better for investors?
um No, I mean, not IBM looks okay in our signals, but I don't think you need to be betting on any like asymmetric AI plays. And like we've talked about this with SoundHound before. Like even if you look at the current valuations, the multiple like Nvidia is growing like more than SoundHound, and they're trading cheaper times revenue. And you look at that, and it's just like, okay, like when the giants like Nvidia are growing as fast as they are, that's why small caps have had such trouble. Like small caps don't look interesting. You don't need to get asymmetric. And like that's kind of an extension of IBM. It's like, why would you want to own IBM when you could own the cloud providers, when you could own Microsoft, like it's or own the cloud providers, when you can own Meta. It's just like, Meta and Google, it's not far off from IBM's PE. But the biggest problem with IBM is like they had such a huge lead on everyone in this. Like, and then just like slowly they launched Watson before, and Watson was just like a decent product. They just didn't know how to sell it. Like Watson could have easily been Chat GPT. Like, granted, they didn't have LLMs, but it did have some of those same interesting kind of capabilities where it did do well in Jeopardy. Like, it certainly was capable of being trained to like do a lot of different applications. So it's just like, how can you trust a company that couldn't even like execute and compete when they had a huge lead? How could you trust them to catch up? I mean, that's just my feeling on IBM.
And spinning from one AI company, not really, to another AI company, not really, Apple. They marketed this new iPad. They had a release yesterday, as being dangerously powerful in AI. Um, it was the first update in the iPad design since October of 2022. There's going to be a new M4 chip in it, but not too many changes. I'll let you give your feelings on the whole iPad design. Currently that we're seeing from the company. But did anything that was released yesterday change your mind about your views on Apple?
No, I mean, actually, I own Apple in the model portfolio. It's doing a little better in the signals. It might be like, it might be kind of like a good value now, but no, like this is just an extension of everything that I've said about Apple. Like this is what they think is newsworthy. Like some slight changes on the iPad, which is also just like tablets, like a lot of other like markets. I'm kind of actually interested, like what share of the tablet market does Apple have?
I would also think that the new headset is kind of a direct competitor for people that would use the tablet, or long term it would be. So
Yeah. I got global market share by tablets. I want to see if they're decreasing. Um, yeah, I mean, Apple had it. Like Apple had it. I mean, they're actually coming up a little more again, but they actually, like, for example, as late as Q2 12, they had 50%. I mean, now they're at 40. They're holding pretty well actually. But like it's just like not exciting, and we talk about this all the time, and it's just like their strategy has become almost antagonistic to their customers. And anytime you see a company doing that, like you got to be really worried. What do I mean by antagonistic? Like this legislation in Europe where they're just like they won't move off their like 33%, and it's pissing people off, and it's pissing people off enough to like fine them and legislate them against that. Like they're drawing a line in the sand, like antagonizing the people that give them money, right? There's no other way to describe it. And then like, when I hear of these version things, I don't think, oh, they're adding huge feature like new features. I just think about how like every Apple device I own starts to like completely like run slowly, and like you have to like even do stuff like not update, which like creates security risks. Otherwise, it's just gonna like drain your battery faster and faster. It's gonna like operate slowly. So it's just like, yeah, like I can't even say, oh, that's a cool new feature that Apple has, because like you know I kind of feel like all they're ever doing is trying to get you to buy something that really is only like marginally improved. That if you don't buy it, they kind of like force you to buy it by loading in software that makes your old device run poorly. So, yeah. And I mean, don't get me started on these like new chargers. I feel like I have to buy new chargers all the time. And like, you know, I had a like my girlfriend had like a different set of like her iPod, like her AirPods. So like now we have to keep like these two sets of chargers around the house, and it's just like, and yeah, like I have my old phone still that I use, and it's just like it's all of these chargers, and like that's just like another thing where it's just like sure they're charging it a little faster, but like it's it's just ultimately like I can't even look at that faster charging because like part of me is just like, okay, yeah, of course you had to charge it faster because these old batteries were shit. And like you want us to replace it and you want us to buy these new cords. So like it's gotten to a point where I can't even appreciate their innovations. And I kind of look at them like more similarly to like I talk about like Microsoft, where it's just like they're starting to go that direction, which is like the antithesis of what they were before. Like products you were excited to buy and like show off and that. Like they're starting to be like Microsoft, where it's like, oh, well, I'm in the Apple, like I'm used to this iPhone. I gotta buy the new one every 2 years because that's what they mandate. And it's just like it feels like they're starting to tread into Microsoft territory, especially with that like 33% in the App Store, like all that stuff. That feels very much just like, well, we're gonna get ours, and like you can fuck off if you don't like, you don't like our rules, you don't like how much you're charging us or replacing the device. Like they have a very like we don't need you attitude, where I feel like before like the Jobs Apple, like, and this was like haughty, but it's like more like it's more interesting and more inclusive. Like I feel like Jobs Apple was like, let's change the world together with these devices. Like, and he sold that pretty well. And that's kind of like startup bullshit that everybody's like, we're changing the world. But like, he sold that. He sold that pretty well, I would say. Where you're just like, yeah, I gotta buy the Apple thing and do like, be like Jobs and all the other cool Apple people. And now it is like I'm starting to think of it, and that just kind of like dawned on me how much it's like starting to be like Microsoft, where it's like it seems like an overlord. It's just like, oh yes, I'll buy your new cord. I need to buy it now. That's what you mandated. Like I need to use your software because I'm used to it. So whatever you say, like that's kind of what I feel like my relationship with Apple is like. And it's not a fun relationship anytime you're like being held hostage by like software that you like, but like less because of the hostage situation, the longer it lasts.
Yeah, that's a great comparison because, I felt that the vibe around Apple was they had, their users were like almost like a cult. Like people love to be in the Apple community, the Apple, so the way you're saying it, it's a big shift in the Apple user base. And I relate to that. I think I agree with it. So I wonder if more people out there would also agree with that. We'll keep our eyes on
Which,
Apple. We
by the
talk about
way,
them a
like
lot.
I'm sure Steve Jobs is like rolling over in his grave that people are saying that. Like I'm sure,
Yeah.
like I'm like, because it is like what we're both talking about is like that was his legacy. Like I don't think like I think he would not care that like Apple has gotten like so much bigger in market cap or like whatever. Like if the cost of that was like the whole image that he cultivated is like slowly evaporating because like yeah like and I never really thought about it like that, but like yeah, Tim Cook is more of an operator, and like he is kind of running it like Microsoft.
I'm not sure how old Jobs would be, but I'm not sure if you know either, but do you think he'd still be running it if he was alive today, all these years later?
Absolutely. Like Steve Jobs is someone that you would have to like one of my favorite stories. There's a really great book called Built to Last. Um and it's actually like these Stanford business PhDs that study successful businesses and interviewed their people, actually created data sets around like what made companies succeed. And there's a great story about the author like interviewing Sam Walton, but like hanging out with him for a few days. And what him and Sam Walton were doing was they were like going around to stores, they were like checking on them, getting numbers, making sure everything was running well. And this story is interesting because at the time, Sam Walton had like months to live. And he had scaled Walmart. It was like, he had done everything he needed to do. And the book author, I'm forgetting his name, like turns to him and says, like, Sam, like this is like great. I appreciate your time, and this is like very interesting doing this with you. But like I gotta ask, like, why aren't you on a beach somewhere? Like, or like relaxing or like with your family? Like, there's like so many things that I could think that like I would be doing with my time. Like, not just like working your job. And like even Sam Walton would like have relationships with all these stores. So it wasn't just that he was like doing his job, he was actually doing a job that few CEOs of a company of that scale would do. But he was just a very hands-on type of guy. And his answer was like, he was just basically like, like, what are you talking about? Like this, like, it's like, you don't have to tell me I'm about to die. Like this is what I love. This is what I love to do. Like, and and I think of that story in response to that because I think Jobs is the same, was the same way. He was just wired. Like he got up in the morning to go and create. And that was, one of the things that made Apple that I think is probably like, if you're talking about like as a leader, we're ripping on. And I think Tim Cook seems like a really nice guy. So I don't want to be too hard on him and like not like, and the bottom line is not every leader is capable of leading an innovation company, a company that innovates or pushing them forward. Uh, but that's kind of how you end up like Microsoft. Like Tim Cook's a very sharp guy, went through all the training there at Apple, but he's going off a playbook that Jobs wrote. And that's not ever going to be the same than someone that knows how to write their own playbook and knows how to like, and when you write your own playbook, you inspire people if you're, not an idiot. Some people are writing their own playbook, and I shouldn't say, and they're just like not very good leaders. And that's actually much worse than managing the way Tim Cook is, which is like safe and stable, like someone that isn't a good innovator. That's just like, wants everybody to do like work on their not so good ideas. But yeah, if you're talking about like basically to put a bow on this, like the difference between Tim Cook Apple and Steve Jobs Apple is probably that. Like Tim Cook probably has a great happy life away from Apple and that he's living. And Steve Jobs was probably just like, in the office calling on people, doing like the equivalent of the Walmart thing, but probably just at the location. He was probably talking to a lot of people. I imagine he was talking to like a lot of junior level people, like, and everyone, and just trying to inspire them or get them to do what they needed to do. And that's just like I'm lucky in that I get to do that. Like I get to work on what I want to work on, and I'm passionate about it, and I'd like to think I'm pretty creative too. And a lot of those models I'm happy to have created, but like yeah, it's a very different animal when like this is what you would be doing, and this is what you would be doing regardless. Yeah, like we talked to a new person that might join the team yesterday, Stephen and I, and I think that comes through, right? I think that kind of puts like a good like closes the loop on this well. I think that like it seemed like some of the work that he's had in the past has been like a little more like intense and like I'm very passionate about what I'm doing, but it's just like I don't need to really press people because like I'm happy. Like I'm happy in my job. So like I don't need to be like pressing other people or having or pushing them to do things that they don't want to do because that seems like a bad way to spend my time.
And that's really winning when you love what you do and do what you love. But
Yeah.
maybe
I don't think
in,
I'd do the Sam Walton thing. I think if I like, knock on wood, I hope I'm not going anywhere anytime soon. But yes, I don't think I would keep working and visiting sites. I might continue to help out, but I don't think I would I don't think I would be in the office like, talking to entry level workers about their days.
it seems like the next CEO we're going to talk about in company Tesla, Elon Musk, may have a bit of that in him where he's going to be doing this till the day he dies. But Tesla got some bad news this morning. They're going to be investigated, or they are being investigated for wire and securities frauds relating to their full self-driving capabilities and statements they've made about it in the past, maybe a little bit of an overestimating. The stock reacted negatively this morning, but kind of bounced back a bit. It's still down today. Um, I'm always surprised by, like, I hear these stories. I feel like the stock's gonna tank when any kind of like Department of Justice or any U.S. government branch is investigating a company. Maybe you just give your breakdown of the situation we're seeing play out with them.
I was kind of shocked when I read it this morning. Um, because I saw, like, I think you looked it up. It was like, oh yeah, it was Dustin Moskovitz who said that it
Yep.
was going to be the next Enron. And I like dug into that a little bit, and I was like, oh, like I thought it was like hyperbole, but some of the stuff that he's being investigated for actually sounds like basically there's a concept called recognizing revenue, which is like if you believe the revenue is likely enough to be earned, you can like recognize it. But it sounds like they might be recognizing revenue on full self-driving, which is a more expensive product, on their auto park, which is just like that is crazy because basically like the mechanics of it are like if they're recognizing revenue for full self-driving when people have only bought auto park and then those people don't buy full self-driving, then they're either like playing a shell game where they're pretending other people that just bought auto park are still like also bought full self-driving, so they're just like moving the shell game around. Um and that's a very tricky one because like if I understand it correctly, and that's just my basic understanding of it, but it does make sense. And I believe if like Moskovitz is saying that, he seems like someone who would do his homework, but I'm just keep in mind I'm just repeating what he said and passing it on. But if that is if they're attracting attention for it, like this is the kind of thing, Musk has had some problems with the SEC. And this is exactly the kind of thing that, like, the SEC doesn't love to ruffle feathers. They like, but the one thing that they will do is if you tangle with them too much, and he had the crypto thing, and he like, there's issues with like some of these like court things, which is not really an SEC thing, but I don't imagine that the SEC likes that he's continuing to push through compensation packages after they've been struck down by the court and they're trying to move locations. But again, in an isolated situation, they wouldn't give a shit about that. But as you start to stack these things, like the SEC, and we talk about this, they're about managing headline risk, right? And there's a critical mass of stuff now where they could say, like, shit, we better really investigate this because if this comes out later, we're going to look dumb. And above all, I would say that's what motivates the SEC, like, or any regulatory body. They don't want to look dumb later. That is a much more that's a much more important thing to them. So like, I am sure Moskovitz chose his words carefully because if you want to get the SEC's attention, like calling something out as the next Enron is a very good way to do it. Why? Because if we're talking about this headline risk and that concept, if they end up actually, if they are doing, corrupt practices in terms of recognizing revenue when they shouldn't, and they can basically, it comes out later and, people can point to the fact that like Moskovitz called this out like years before it happened. That is the exact kind of story that the SEC hates to get, and that is the kind of thing that makes heads roll because who likes that even less than the SEC, whoever is in charge of the country when that happens. so like that is like the only thing that tends to, but I mean, it doesn't happen like, to my knowledge, nobody at like Moody's or any of those other places got fired when they rated things wrong. But I do think the SEC has a little more pride in what it does than those rating agencies. Like, not to call them out, but they could have fired those people and they didn't. So it's kind of like a self dunk on that one. But yeah, this is going to be a fascinating story because it's just like it kind of goes up to two things. Like, because we talk about this, the SEC doesn't really like to ruffle feathers. They never want to be seen as like anti-business, like anti-stock, because like this ties to one of our early topics. Like the the worst thing the SEC could do is miss something like this. The second worst thing the SEC could do is fuck with the stock market going up. So, and actually, I might have flipped those. But like that's basically what they're dealing with, and so like for some people to understand, it's just like, yeah, that's what they're dealing with. Like the number one thing that they can't do is like bother enough people that it interferes with the stock market, but at the same time, they do have pride in what they do, and they don't want to get caught with their pants down. So this investigation is going to be super interesting because it shouldn't be that hard, right? If they've been doing this and they can basically ask to see data of saying um like, okay, who did you book revenue for full self-driving, and how many of those people did you receive cash from? They could ask that question. Now, like, I'm just going to be clear that it's very clear that it's a hypothetical. Like, what could happen is that they could be given fake numbers by any company that they start to investigate. Granted, they can do an audit, but there's they didn't find Bernie Madoff for a long time for a reason. There's audits, and then there's full audits where like again, this kind of goes back to what we're saying, which is just like, well, did they you know did they get a little too afraid that they were going to ruffle feathers and maybe not find anything, that they didn't go as deep as they probably should have? It's a tough game, and that's what's going to be so interesting about this story, because they could find something, or they could not find something now, or they could just like start to look for something and realize that it's too big of a thing. And like that's what is going to be very interesting about this story, because I will tell you one thing: if they are close to finding anything, there is no way Elon Musk isn't going to play every card that he has to rile up the Elon Musk army to get them to try and get the SEC to stop the investigation. So that's going to be like, granted, these are all permutations, but I think we're in for an interesting story on this one regardless.
And that final statement was the cherry on top of the short that all of our viewers are going to see this week. That was a great finishing line for it. We've come to the time where we should do our switchover, I think, and we'll see you on the other side, and we'll do the model portfolio update.
Yeah, hopefully the Musk people don't get like, yeah, we'll see. We never like, we always piss off one side of the Musk debate, sometimes both. That might be that might be one of them. We walk too close to the center and everybody's mad at us, but we'll see. All right, I'll be right back.
Yep. Yep. See you on the other side. All right. For our viewers who are going to be sticking with me before George comes back, we didn't get to the topic, but I'll let you know which stock it was that went from a $49.3 billion valuation in 2021 to a $1.3 billion valuation today, and that is Peloton. They were a pandemic darling, but unfortunately, looks like they predicted and kind of maybe their numbers and forecasts got skewed by the boost business and excitement they saw in their business from the pandemic and everybody being at home. So they have seen nearly a 50x decline in market cap. And the reason I even brought this story up today is it was looking like some private equity firms are looking at taking them private after years of decline. And then also another story that we did not get to today while George was with us, the FTX money story, where excuse me, where customers who have claims for $50,000 or under that were affected by FTX are going to receive 118% of their claim total. So these people will actually be getting their money back and some. And some of that is due to the rebound in crypto, but also a smart investment by Sam Bankman-Fried when he was still the CEO of FTX in the AI company Anthropic that we've talked about before, that I believe Amazon is one of the major investors in still. But now we're going to be turning it over to the model portfolio. Just running through some of the stories.
We had some big wins yesterday. I picked the wrong ones. I is down 17%. Grocery Outlet is down 18%. I guess they both reported yesterday, right? I don't have time for this. But I picked 2 shorts yesterday.
That got hammered,
of the 5 that I picked, and like those were 2 that I added, and I definitely picked the wrong ones because one of mine was up 7% today. So for the investing letter, but hey, you can't win them all. Yeah, one of my shorts in the investing letter this week was very interesting because it was a company called Pink, and they actually had good earnings, and for some reason they went down a bunch.
Maybe bad forecast.
Well,
I don't know. I didn't see
part of it was part of it, and this is a good lesson too. Part of it was that I had 5, and I grabbed. Oh no, I grabbed these 3 in my portfolio, and this one was a big winner. I don't know about PZZA. No, I mean it's really basically they beat, but they basically were less profitable than a year ago. So that really matters too. I think their guidance was underwhelming and there was some margin pressure. But yeah, that's definitely. Okay. You want to tell me what's going on with net option sentiment, QQQ, SPY?
Yes. Let's do it. So the SPY is at 46 currently, and the QQQ is at 34.
Ooh.
That's a little bit more separation than we've seen most of the time recently, I feel like.
Yeah, I mean, probably going to diversify a little more. I'm glad we divested all that tech yesterday. You said 46 or 40?
46, yep.
Can you tell me how many CEG we have?
Just one.
Oh, I should have added more.
Actually, it's 2. My bad.
Trying to screw me over here, Steven. All right, where was
I? We got a question from Joseph asking why the QQQ net option sentiment says 42. But I think I can answer it, Joseph. I think you're looking at the time series graph, which is from 12:35 p.m., which that only updates, I think, 3 times per day, whereas the number up top updates every 3 minutes. So,
yeah. Our newest version of the app is
there.
going to make that a little clearer. You'll actually see the numbers update. But yeah, so that confuses some people. But we can't put every data point on the time series graph because sometimes it would be too hard to read and you wouldn't be able to like thumb over it well. So part of the reason we like 3 a day is because it gives clarity on like the longer movement and you can see more days on a graph and it's just like you can get a better picture of what's going on. What do we got here? We're gonna hold Palantir. Let's actually just look. Yeah, I like what's happening. KKR, that looks like a good ad. Uh-oh, fan. Yeah, I think we're gonna leave it. I think we want an energy. It's still our favorite energy model. CV, CG, just a champion. Apollo, I think I want all that. Okay, let's look here. AVD, that's about right. Didn't we get rid of IWM? I keep thinking we did. Oh, JLL is doing well. SCCO also doing well. Okay. Nothing to see here. What's going on with SRPT? That's nice. All right. What's going on the shorts? 3 Xerox. $47. All right, VFC. Is VFC a win?
VOC.
VFC.
VFC, my bad.
No problem.
VFC is a win.
All right. What are we not? Oh, yeah, we're not exiting anything well. Oh, Tel. Is Tel a win?
It is.
Oh. Great news. Okay. I have 4 LPLs? That's a lot of LPLs. I think 4 is too many. Ugh. I'm annoyed at myself for not adding this. It's a miss. How many of those do we have? We're gonna IRT is IRT a win? It doesn't.
Loss currently.
Yeah, it doesn't. I don't know. 355. I'm not sure if I want to. Have long and short. But we'll see if anything looks new and interesting. Okay. Been a long day, Stephen. I'm very excited to
Hump day.
get to the other side of this. I have an event for like a Substack, like for Substack writers after this too. I don't know how I'm going to survive.
Can the people in the stream tune into that, or is it?
No, it's
private?
like a network. It's like a networking event. I don't think I want to do. Oh, Tesla is coming up. That's interesting. It's not been on. We'll grab it again. Why not? Oh God, I don't know. I'm nervous. All right, whatever. Who cares? We're not gonna think too much about it. All right, I think that's all we're doing on that side. Oh shoot. We just have plenty of these. No, we're not doing that. We're not doing that. We did this yesterday. No, maybe, yeah. All right. Okay. Oh, that's kind of funny. I did this wrong. All right. We need one more. That's annoying. No, we're not gonna. All right. XXII. Biotechnology. That looks good. I think we have some ACI, but iRobot is something that nope. Definite note. Definitely mad. Oh, really? That's interesting. Okay. What is Fox Factory? Oh my god, this doesn't look like a good. No, they are going down. Could be interesting. Fox Factory is an interesting one. Let's give it a try. All right, we are almost done. Getting a little lazy there. All right, done.
Looks good. I don't see any questions in our chat. So I don't think we have anything else to cover, George. I think we're good.
All right. Thanks,
All right,
everyone.
thanks, everybody. Thanks for tuning in. Good to see you, George. Happy day. Happy hump day. See everybody back here Monday. Normal stream.
Bye.
Goodbye.